made a very interesting point as to how in today's world we're getting more inclusive, yet at the same time we're getting all interlinked because of AI and the tech evolution which is currently at play. How does India fit into that pool?
Well, I think in terms of the interlinking,
Yeah.
I think that...
and AI innovation as well.
Yeah, well, I think India is a very innovative country, and it's part of the backbone for AI, and I think will continue to be. I think a couple big strengths for India are what I alluded to before, is that India just has a lot of efficiency that it can increase. I think you're sitting there with a cell phone, and I think that the cell phone analogy, if I may use that, in India, India leaped from no phones to cell phone, right? It didn't go through the wireless. And I kind of joke, but it's true. And I travel through rural India. Everywhere I go in India, I have great cell phone reception. In Silicon Valley, believe it or not, we have terrible. You get around the hill, we have terrible cell phone reception.
But yeah, if you say so.
And so I think that's, you know, a real possibility for India. Not necessarily the AI itself, but the implementation of the AI and a real leapfrog in terms of industrialization and using AI to improve efficiency. And just my knowledge of working with Indians and the Indian culture is you have a culture that's likely to pick that up pretty quickly.
But where does that leave the traditional IT services play? I mean, one would have thought that they would be the first ones to actually adopt to AI. Yes, many are now getting into data centers, and we have one large IT services company announce that a few weeks back. But do you really think they will be able to catch up on the entire AI/tech innovation?
Well, I think that's a good question, and it is certainly not clear that they will. They could actually be part of the constructive or the creative destruction. So it's really a question. It's interesting, a few years back, we thought that they were actually going to benefit, and now we actually see that AI may be a competitor to them. And I don't know how that's going to play out.
Do you think one is safer when it comes to India to invest in the consumers of AI as opposed to the innovators? Because that's where you don't have clarity right now.
Yes, I do.
Yeah. When you talk about China, and we must address that piece, because part of the outflows from India have also, you know, found their way into China, and it has a much higher weightage now in the emerging market basket as well. Wanted to understand whether that's just a tactical play or is it a structural story from the COVID lows that we've seen in the last 1 year?
I think it's a tactical play, and certainly I think that longer term, the structure of the markets in India is more positive than China. So when I'm talking to foreign investors who ask me the difference between China and India, I say you have to be careful to always know that the economy is not the market. So China's economy has had phenomenal growth, but China's market has had dismal growth. India's economy has had good growth, but India's markets have had phenomenal growth.
Yeah.
Why?
Yeah, why?
Because the economy has translated into revenues and earnings growth in India that in China, they just haven't had a return on their investment in the same way. And if that continues, ultimately, it is earnings that drive equity markets. It's the earnings that drive the productivity. And that structure that India has is incredibly positive for the long-term view.
Well, when it comes to India, and we've addressed IT, but when you talk about sectors, is it banking, financial services? Is it infrastructure? Are those the structurally strong plays, you think?
Yeah, so I'm not such an expert on India in general, but I think that, yes, probably the consumer. I think that the industrials can probably do a lot better in terms of their efficiency. And the growth in India is going to be represented in their banks.
But what has been really surprising is the way some of the crypto assets have done.
Yes.
Has that come as a surprise to you? And kind of now sort of global acceptance that it's finding at global stages, if you will.
Yes, to be honest, it is a surprise to me. And I think partly because as a kind of traditional investor, it's been hard for me to get my head around cryptocurrencies and then to think about how they might make sense in a portfolio. So if you'll indulge me, let me tell you my learning path on that. First of all, with just the blockchain in general,
Yes.
I think the blockchain is probably something that will take effect and will have a lot of effect within companies, especially financial services. It's hard to invest in that per se. Crypto is a little different than that. And with crypto, I divided into two categories. The first category, which is primarily Bitcoin, is very similar to gold. It's just an asset that has a value based on whether people think it has a value or doesn't have a value. And so you have to value that in the same way you do with gold. First point is then it is an asset that you can value, so it's a legitimate asset to put in your portfolio. Okay. So then the next step is your question, should you put it in your portfolio or not? The problem with putting crypto into your portfolio is it's so volatile. If you're managing your portfolio to any risk target, that volatility has to take something out. And what it takes out is equity. So you put 2% of cryptocurrency in your portfolio, you have to take out, I don't know what the right number is, but 5% of equity, and you don't want to do that. So you have to rethink what type of portfolio you want. And so you do that by adding cryptocurrency to your benchmark. And then you have, in essence, readjusted your risk tolerance. And then you can add cryptocurrency to your portfolio. And then some diversifier, either it's precious metals like gold or cryptocurrency, probably makes sense to be 2 or 5% of your portfolio.
Unfortunately, the Indian investor doesn't have too many avenues to invest, right? Or, as you say, diversify into global assets. What's the option at hand then?
Well, you can do a little bit outside of India, and I think that it's hard to do because the Indian markets have done so well. And my argument for that is really risk-adjusted return rather than absolute return. I'm very bullish on India, so I think India will do well, but you have to look at the risk involved in that. And so it makes sense to be diversified with foreign investments, 10 or 15% of your portfolio. As I also mentioned, you should look at traditional diversifiers, even though, as we've discussed, they haven't been great diversifiers lately. Those traditionals are precious metals or gold or something. And I'm just expanding that a little bit to say that might include digital assets as well. And I think you shouldn't underestimate fixed income as a diversifier of the portfolio. It hasn't always worked, but it has to some degree. We think fixed income returns are basically going to be the coupon over a period of time, but the coupons are pretty good at this point. You can, again, boost that a little bit by diversifying within fixed income with corporate credits or private credits, which we think makes sense to do as well.
So you're basically playing on Buffett's rules. Not earn as much money, but don't lose money, and don't forget rule number one.
Don't lose money. I think being in the markets for a long period of time, this is a market where everybody's a genius because the market's just going up. And you really find out who's a genius when the markets start to settle. And that's what I'm trying to think about right now. And how do I look at that? How do I tell you really through this whole conversation, I'm contradicting myself because I'm telling you that I think the markets are likely to go up, and so you want involved in them. But I'm concerned about the risk
not losing
on the downside. Yeah. And so that's the real struggle. My history is as a value investor, so it isn't often that I have an interview like this where the markets are at a peak and I say, well, there might be even a little more room. So I'm uncomfortable with that. And so I have that sort of value perspective, yes, but how do I protect myself?
And you think that should be the urgency right now? Don't lose what you've made in this market.
Don't lose what you've made.
So now we're going to play something called the rapid fire. The rules are very simple. I'm going to very rapidly ask you some questions, and hopefully your answers would be full of fire. You just have to be very quick with it.
Okay.
Okay. So your first question is the sector in sweet spot. Your top sector in India for the next 12 months, if you can answer that.
Yeah, I think I'd probably look at the banks.
Banks. Biggest market risk. Biggest risk for India in the near term, would it be geopolitics, valuations, or global rates?
Geopolitics.
Okay. Dollar dominance continues, bullish or bearish on the rupee?
Bullish on the rupee.
Bullish on the rupee. Which comes first, Fed cut or India cut?
Fed cut.
Okay. Outside India, one emerging market you'd be overweight on today?
Brazil.
Okay. You were very, very rapid. Congratulations. Well, thank you, Stephen, for your time.
Thank you for having me.
It was great chatting with you. Lots of insight.
Good.
Thank
I
you.
enjoyed it. Thank you.